Till para 7. Now let's move on to para 23. Now on the paras are important. Para 23. Para 7 was not so important, but from para 23 paras are going to be very important. In para 23 it is told that when a long term investment is converted to short term investment or current investment, then how to show the amount of the investment in the books of account. So how to show the amount? Cost or carrying amount that is book value of the investment on the date of transfer, whichever is lower will be shown in the books. So firstly understand it properly. Okay, when long term investments are converted, that means are transferred in short term investment, that means you are holding a long term investment for a you were holding a long term investment for long years, but now you want to convert it for short term investment. So how to convert it? You have to convert it. This is quite illogical, but the questions are asked. A long term investment is converted into short term investment. So how to do that? So how to show the value of the investment in your balance sheet, that is in the books of your account. So how to show the cost or carrying amount? Cost means the cost of the investment, the market value, or the carrying amount means the book value of the investment on the date of transfer, whichever is lower. Cost or carrying amount, whichever is lower. So I'll write it in a text manner, how we used to study in text. Cost or carrying amount, whichever is lower, okay, will be shown in the books. Okay, so it was long term to short term. Now we'll see short term to long term. Okay, the short term, we have seen long term to short term, it was para 23. Now long term to short term is next para only, para 24. It is also important. Don't write now, I'll give time to write, you all also know. So I'll write short term investment converted or transferred into long term investment. How to show the value of the investment in the books of accounts? It is simple. Cost or fair market value of the investment on the date of transfer, whichever is lower, will be shown in the books. Okay, wait, I'll pull the book little bit up and we'll write in a text manner first. Cost or fair market value whichever is lower. And trust me, sums are asked on this only in accounting standard, because accounting standard is purely theory based. So such types of questions are only asked. We'll see the practice manual after completing the paras. So firstly, please copy down the first para 23 and para 24. Please pause the video and copy this much first. I hope you all have copied down this much. Please copy para 24. I hope you all have copied down. Now let's move on to para 29. Again an important para. What does this para says? We'll first discuss, then only we'll start. This para says, when you purchase an investment, it is not always mandatory that you always purchase the investment for cash or on credit purchase. There might be a possibility that you give some asset and you purchase some asset in with no difference. Direct, you gave the asset and you got the asset. You gave the security, you got the security. So how to account that? How to show it in your books of account? I'll show you now. Okay, so it is exchange purchase. Exchange purchase. Firstly, we'll draw a chart. The chart first says exchange purchase when securities for securities. You gave security and you got security. Okay. Securities means debentures, bonds, equity shares, preference shares and all. Okay. Securities for securities. And other part is asset for securities. This securities for securities, you face the practical sums in investment accounting chapter that I showed you in the practice manual. There you will face it. How to deal over there I'll show you. But the theory part that are asked in accounting standard theory, the first 20 marks questions, that is the four questions, the mandatory questions that you have to solve. In that they might ask this, how to account, how to show the price. So I'll show you. So you have to value the purchase. So you have exchanged it, but you don't know the price at which you have purchased it. So how to show the price of such asset or such investment in your books? I'll show. When securities for securities, that is fair market value, FMV, or fair market value of the securities. Okay, wait. I'll show you. I'll tell you one thing. Here there are no two things, because if you don't know what is the price or what is the selling price of your securities, that is okay, but you might know what is the cost of the securities that you are purchasing. So the fair market value of the security, whichever is clearly evident, either giving or either taking. Okay, so fair market value of the securities, whichever is clearly evident. There is nothing like whichever is lower, whichever is higher. Directly fair market value of the securities that you have received, or if you have received, then the fair market value of the received one. If you don't know the price of the securities that you have received, then you have to take the price, the fair market value of the securities that you have given. Okay, simple as that. Now asset for security. Here there is, you purchase the securities, asset for securities. So how? Value of asset given / acquired, whichever is lower. So what does this says? When you are given the asset, there might be possibility that you don't know the value of your asset that you are giving. So the value you are giving, but you know the value of the asset you are purchasing, that is the security. So value of the asset acquired or value of the asset given. There might be a possibility you don't know the value of the security, but you know the value of your own asset. So value of the asset given or value of the asset acquired, whichever is lower. Hope this is clear. Please don't pause the video and copy it right now. Firstly, I have 3 more paras which are very simple. I just need to write and you will understand it. There is nothing hard in that. Just like you know this. Closing stock will be valued at the end of the year for cost or fair market value, whichever is earlier, that we are studying from our 11th standard. Similarly, there are sentences which are that simple. Okay. Para 31, it is for current investment. What does para 31 says for current investment? It says current investments are valued at cost or FMV, fair market value, whichever is lower. If you remember, closing stock is also current asset. I told you when I was telling you para 7, I just wrote or stock. So stocks and current investments are same. So they will be valued at cost or fair market value, whichever is lower in the books of account. Okay. Now there are question asked on this also. So please mark it important. Para 32. Now we have done for current investment. Now we should do for long term investment also. How it will be valued in the books of account. Long term investment will be valued at historic cost unless there is permanent decline in the value of the asset. There is a practical sum in the practice manual. There you will get a better understanding, but I'll give you an example so that when solving practice manual you will find it very easy because we have already learnt it in theory. So what does this say? Assume you have buy an gold brick. You have bought a gold brick at a cost of rupees, assume, just an assumption, a gold brick for rupees 2,50,000. But suddenly, you have bought it 2 years before. 2 years before. That means you have holded such gold brick for more than 1 year. That means it is a long term investment, and you know the prices of golds are fluctuating, and suddenly after 2 years there is a permanent decline in the market of gold. Say the price of that brick that you have purchased earlier was rupees 2 lakhs, but now it is only 1 lakh, but it is a permanent decline and there won't be any appreciation as per the market. So what you will do, and they have declared in the market that this is the permanent decline. So if there is such a case, if there is a permanent decline in the value of a long term asset, then the value of such asset will be only decline. That means from the historical cost it will be brought to the market cost. So this para says that long term investment will be valued at historical cost unless there is a permanent decline in the value of the asset. Quite self-explanatory. Still I explained it in a better manner so that when solving the practice manual you will get a grip on it. Para 33 says, it is also important, any reduction in the value or reversal, that means if you have made any reduction and you have again reversed the reduction, that means you have appreciated. So what to do? Shall be recorded in P&L account. So this they have guided us what to do if you ever reduce the value of the asset or you reverse it. That means if you have earlier reduced it, now you want to increase it, you have to record it in the P&L account. Hope quite self-explanatory. Please write para 29 first. Para 29 and para 31. Please write it, copy it down, pause the video. Please pause the video and copy the remaining part. I hope you all have copied.